There we go. All right. Good morning, everyone. Dan with Tradingology.com's trading room session for February 27th. Good to see you guys. How are we doing this fine morning? As we see, we've had some major market activity once again, with the Dow being down quite a bit. Actually, across the board, everything's down, right? But now we are seeing a little recovery. We'll see what that lasts. And as we see, looking at the futures contracts here, we're kind of playing ping pong on the pivot points, which is a lot of P's at one time, so that's fun. So we see the ES that I like to focus on opened up, hit a level there, came all the way down, hit this level. Now we're coming back up to this one, and it's bouncing off this one. So we'll see if we come back down and how the day works out. And looking at the true trend day setting up, we have seen that morning that was all part of this decline. We've had one, and the current one is green right now, but that's common that one may be green and then close red. But looking at our true trend day, we are still below negative 2,000, and it has stayed there all morning. Looking at the internals are buried. Yeah, everything's down there.
Pretty close to a perfect true trend day, except for that one green on the volume. But yeah, we on Market Timer, I don't know if you noticed, but, and I mentioned this in the trading room at the AVS is above 1,500. That's a pretty good indication that the selling is going to continue. The second thing is that the 21 and 27 day sums are like, I mean, after this morning, they're probably down close to 3,000, minus 3,000. That's typically an area that attracts buyers.
Yeah, we're currently 470 and change down, so it was down even more before.
Yeah, it was down 922 on the futures. That's the lowest I saw it.
And that's fought back to 438, looks like right now. So yeah, for sure. I bet you're right. I bet it probably did hit that 3,000 level at one time.
Mm-hmm. Yeah, I'm pretty sure it did.
I had one trader asking too, I'll make this point quick just so I don't forget about it, is that we do have right around the same time as earlier. We'll stop at about quarter to 11 my time, quarter to 12, give or take what you guys got going on. But trader was asking about, watching the signals indicator and how it was kind of different this week, and verifying that she had the right one, because she was watching one of Dave's videos and said, hey, that's a different name. Is that the right one? I said, I have verified, and yep, that was just the pre-release name. So the empty signals were there. I said, one thing you want to remember in market conditions like this is we don't rely on just any one indicator, where we're looking at, the daily charts, we're looking at the bearish herding. That's where the market timer spreadsheets come into play. So we see full bearish herding here, where we are in that. And then looking at those same things on an intraday basis, where those scripts come into play, we can see how the balance of power levels have been rising all morning, and full bearish herding on everything, Dow, SPY, NASDAQ. So we're looking at that at the same time. So never rely on just one indicator, because you're going to have much more strength in any move that you're taking the opportunity on if multiple things are lining up. So I know anybody that does have the package, yeah, you can definitely key on one when you want to start making your entries and exits, but look at the high level, look at the big picture, make sure you're in line with what it's saying. That will definitely help your success factors.
Well, it looks like on the NASDAQ supply demand, the SD indicator, we keep going lower and lower. So I'm not trusting this rally here. I don't think it's going to last.
Yeah, I keep seeing we're starting to turn, but we're still over that 0.8.
Yeah.
Still at extremes. We've come up a little bit on the internals, but it's still below 20.
Yeah.
So I feel the same way. I wouldn't trust this. Unless this starts turning way back, or we get some crazy news like they suddenly cured the entire world of coronavirus, since they'd like to pick on that for the reason behind this, which I just love. But how we love news.
Yeah, they pick whatever they can find. Of course, Corona is the big one. But yeah, we've got, the market is really finally starting to get interesting again from a trader's perspective, because there's lots of movement. Every once in a while I have to adjust my charts because I'm looking at the axis on the right side, and the distance between the numbers are like 200 points on the
Yeah, it's
dial.
crazy. I did the same thing this morning. I'm like, these are 100-point levels now.
Yeah, yeah. All of a sudden they jumped to 200-point levels. It's not 20 points anymore.
Yeah, you can't see it unless you squeeze it in. You're like, holy cow, I'm trying to make a move on that. And I'm looking at, just whatever normal real estate on the screen. It's, hey, this is usually 10 points. No, this is 50 points right here.
Yeah.
It's like, whoa.
Yeah.
Yeah, definitely be careful. I know you mentioned that on your room too, is with those numbers hitting, we could definitely see a bounce. And this could be part of attracting those buyers like we were just talking about with the 21 and 27 day sums.
Yeah. So it definitely attracted buyers at those levels. And then we've got the advanced decline line starting to move higher a little bit. Still under that 2000 level though, but it has it found some support right around 1030 this morning.
Yeah, 2101 right now. It's close to breaking above 2099 there. We see it moving. We've had a second green on the volume chart now too.
Yeah, absolutely fascinating. I mean, long term, wow. This is kind of very interesting. I mean, we're down for the year now already. Wiped out all the gains that we had in January. We're, it just looks extremely weak. I wouldn't be surprised to see what have we lost now between just this week? I mean, you're talking just this week, right?
Look at that.
Yeah. I mean, it's only been a few days.
Right. And we still got Friday, which has not been good this year.
Yeah, that's right. We were talking the other day that all the Fridays have been negative, and last year all the Fridays were just about positive. But I don't know. You think we're going to go up and fill that gap from the beginning of the week?
I don't think it's going to be anytime soon, and we'll see though. I think that might be a gap that sits there for a while.
Yeah, maybe. Yeah, maybe. I don't know.
And you look at this on the weekly chart, balance of power or hurting definitely saw it coming. Look at where it came in the previous weeks.
Yep.
Those didn't just draw in today because I switched it. Those were there.
Yep.
So if you're watching this, and we saw that a previous drop, then this was a fake rally, and then here we come.
Yep, absolutely. Definitely called it. You can't fool the balance of power. More selling. They were selling on the way up right to that top.
Yep, starting to come into it. Bullish hurting went away. Then right here it was completely gone.
Yep. Yeah, there was nothing but bearish hurting.
Frames.
Absolutely. And at the same time, the MT volatility started rising as well. Interesting thing is when it was going up, it was above 90% just about every single day, which is very, very close to that tipping point of 100 where there's more bears than bulls.
The other one I saw today too was looking at the synth levels. It just bottomed out. I got, like you say, adjusting the charts. Look what I got to do just to see this one.
Mm-hmm.
Look at how far this went down in today's melt. And look at how far away SR1 and 2 are.
Yeah, they're really spread apart there. Yeah, they're really, really spread.
You think
it looks like we tried to get up to that SR1, but boy, it doesn't look like it's going to make it. It might make it, but we'll see. That kind of decline shows you how incredibly weak this market is.
Yeah, we hit 26,000. That's where a bunch of buyers said, I'll take that.
Yeah.
Probably Warren Buffett.
Yeah. The permeable. I think he made a statement last year sometime that he thinks, over 100-year period, it's going to continue to go up. Yeah. Like anybody's going to be around to see it.
Who's going to say you were wrong at that point?
Yeah.
Yeah, look at that weekly, or this is the 10-minute. So as soon as you saw that reverse, that's why we say, or that's why I was talking, watching multiple indicators. We're still buried at 10 here, But when the MT synth went back to positive,
Yeah.
if you were in a short, that's a good signal to say, I better get out of my short here.
Yeah. Yeah, definitely. Actually, when it started going less negative, so you had that peak.
Even right
Just-
before, yep.
Yeah. But I don't know, the advanced decline starting to move back down again. So based on the volume profile that we're seeing today, it's very, very close to a true trend day. Not perfect, but pretty darn close. So market makers, specialists are starting to, I mean, they must have a large number of sell orders right at the open, and they're just dishing it out to the market.
Gary says on true trend days where we have the declining issues outweigh the advancing issues by 8-1, the same with the volume. What's pushing the market up? Orders coming in, it's all supply and demand on the table. If it's at a certain price.
Yeah, there's always there's always players that are in there, looking for bargains. So they'll go out. They have so much money because of the Fed printing. Large institutions, they got to put the money to work someplace, so they'll come in and do a little buying.
Yeah, people with deep pockets are buying there.
Yeah, long-term investors. But I think the specialists had so many sell orders that they're kind of like they're pushing them out. They're pushing them out probably right to the end of the day. As long as we stay below 2,000 on the advanced decline line, we'll continue to either go sideways here or lower.
Yeah, as long as these don't cross the 0.2 and that 20 going into 30,
yeah.
I would absolutely.
Yeah, that's the key.
And I see you guys jumping in the Slack channel, so great to see. It's open for everyone, so it's not just going to be, I know Dave's got one for his real-time updates, and I put one out there for all the Tradingology members, so it's wide open. You guys want to chat with each other, got any questions, I'll be in there mostly throughout the day, but I'll be in and out, and if I see anything interesting, I'll throw it in that Slack channel, so glad to see you guys coming in there. And girls. I haven't talked to a girl trader. We got a few in our group. It's not just all guys anymore.
Oh, that's good. That's
good. I like it. But she's doing good.
Awesome.
How are you guys doing this morning? Anybody taking advantage of these opportunities? Or are you sitting on your hands and watching because of all the volatility? And some people did ask too, and I should reiterate quickly if you got a question, is these lines, these are not strong market timers. These are not custom. These are built into TOS. These are the person's pivots. And the other lines that are not dotted are the Camarilla points, which are also built into TOS. So these are built in ones that I started watching weeks ago. I was telling Dave about it. The more I keep talking about it, he's like, I still haven't added them, but after today's gonna be like, how do I not have those on my screen now?
Yeah, I added them. I'm on a 2-minute chart though, and they didn't hit the same levels as the 5 minutes.
Oh yeah, I've never went away from a 5 minutes. That's the only one I use these on, so I haven't even tested it on lower or higher.
Yeah, I put it on a 2-minute, and they didn't hit them at all. They went above them. But
yeah,
5 minute looks like the ideal time frame for those.
Definitely. Yeah, you can't use them on dailies, anything like that, because what it does is you can look at the formulas too. They're out there. Same thing with the Camarillas. Is they take the open and the close, the highs and the lows of the previous day, and they build in these levels. So other computers are also programmed at it, so they're going to buy here. Maybe I should buy there too. So the pink one is the middle one. So the way it kind of sets up is below it, people are looking for it to go down. Above it, they're looking for it to go up. Then these are support levels where they will typically bounce. And they'll bounce on both sides of it. Look at the Camarilla level right there. Just perfectly hit it and turned around. Perfectly hit the support, turned around. I use them for exit points. Like if I'm in a short, because we see we're selling the rally as it's going down. If I'm in a short, I will exit it before it. You want to front run it. Don't wait for everybody else that's already lined up there to buy. get out before. So that's how I'm personally using them. I don't use it to say, all right, I'm going to get in right here, because sometimes it'll continue. So I'm using it for exits more is what I do. Then use other levels for entry points. And the levels that I had this morning actually hit before the market opened, because they all came down. There was so much activity pre-market today that the levels that I established early on already got hit. So I didn't have to do any trading after the market opened. So I was happy there. A few people have asked those future levels. Where's my little notepad? Oh, I closed it out. Let me grab it here. Like here was my this morning on the ES 3075, which hit well below or well before we started out. So I hit all the targets coming down, then the NQs as well. So these are ones that we're going to be adding to the trade setup alerts for the vol arb started in March.
Which is only a few days away.
Yeah. We get a bonus day this year. We got leap year or leap day coming. It only happens once every 4 years, right?
That's right.
And then I'm going to do my fasting on February 31st and 30th. The importance of the future levels, Andre, is where I establish where I'm going to get into a trade. And then the targets are when I'm going to get out. So if I'm doing, say, 2 or 3 contracts, I'll enter. Then I'll exit 1, exit 2, exit 3. If I'm only doing 2, I'll just exit there. So I'm looking at pre-market activity, and I'm defining the optimum levels to get in and enter based on what I see in the morning. And I'm doing it currently on the ES and the NQ are the most common ones. I'm looking at adding YM later, but I only, you can only trade so much at the same time when you're watching these quick ones. So I don't want to be in too many at the same time. So I'm starting with 2. So I'll share those. I've done a ton of study on it and back testing. It's worked fantastically watching those pre-market activity levels, especially since the futures trade 24 or 23 hours a day. I'm talking about just straight long and short on ES or the NQ contracts, not at the same time. So it's not like long ES, short NQ. This is just straight long or short on one or the other at the same time. I would, if people are starting out, just do one of them and not both. And obviously add this to the micros while you are testing it. So you're doing the micros on the one or the other. So completely separate from the volatility arbitrage strategy. This is, I've kind of developed this because the vol arb has been manipulated with all the price inductions, so all the injections of money, where we see that it has, it's not doing its usual oscillation. It's been a lot to the downside with a few peaks to the top when it hit the 3 level. We have seen that, but that's why I developed this over the last few months as something else that I could trade while that was doing what it was doing. Does that make sense? And so these levels I use for defining these exit points. That's where they all come into play. So I'll find a good optimum start, then I use the levels in the person's pivots and the Camarillas to exit. Perfect. Happy to help. And I'll probably put together more videos on that and put them up on the member site to help people out. But that's kind of the long and the short of it. It's been working great for me. So I try to provide info just like Dave has over the years.
Yep, you're doing a good job. Good job. I like that.
People ask, has this been vetted by Dave yet? So they want to know that you like it too.
You like it.
All right, let's see what's going on in the daily again. Oh, the one thing I did post to, I think you guys saw, is that fear index. We're down to a 15 this morning on the fear greed index. Last I looked.
So that's extreme fear?
Yeah.
Yeah.
I'll pull it up here.
What was it? What was the high extreme greed? It's like 80 something, 90?
72 1 year ago.
I think it was more recent though. It was.
Oh yeah, it was definitely above here just like a couple weeks ago.
Yeah, yeah.
That
So yeah.
Week high.
Okay.
Yeah, this has definitely recently been dropping.
Yeah, well, I mean, after it drops 2,300 or 3,000 points, yeah.
Right.
Everybody's like, well, they only react. They don't anticipate. The 10-year dropped to its lowest level this morning. I mean, it's just, it's unbelievable. It's 1.1 or 1.2%.
On the 30?
No, the 10.
Oh, okay.
The
Okay.
10. Yeah. Oh my gosh. If the 30 hit that would be ridiculous. But I think the TLT is not, I think it's just kind of sideways at this point. So it's not going up anymore. But the 10-year, yeah. So, I mean, the very next, I think the Fed has to follow the 10-year and the 30-year. If they see them dropping, they're going to have to lower interest rates. So negative rates are coming. I don't see any way around it. Oh, there was a fantastic video by George Gorman. I saw it this morning. For you guys who have not seen it, it's Jeff Snyder on the repo market in the euro dollar. Let me see if I can get the link. It is absolutely fantastic. I highly recommend you guys take a listen.
Yeah, I can grab that or find it here. Please, I'm subscribed to George. He does something. He's one of the best guys for explaining things. That's for sure.
Yeah, he does a pretty good job. Some things are just a little convoluted, but for the most part, I think he's got the right idea.
Which one were you talking? Which video with Jim?
Jeff Snyder.
Jeff Snyder.
Repo market. I got it.
You got it already? Okay.
Yeah.
There it is. I see it too. Okay.
But yeah, he's this is the Jeff Snyder. I haven't heard of him too much, but he was really, really good in this. I think you guys would enjoy it. He especially explains international transfers and international kind of how the banking system works on an international level. They don't have the same reserve requirements as the United States. So there is no 8% reserve requirement. So basically you could send them money, the United States bank could send a foreign bank money, which is just an accounting function, really. It's just a ledger function. But the other bank doesn't have to keep 8% in reserve. They can say, hey, we got money now, and they can lend it out, and they don't have the same reserve requirements that we do. So they can lend it out to another bank in another country. And of course, now they have, a balance on their balance sheet that they can use to lend to someplace else. And it's like, it's really just a Ponzi. So like, there is no real money moving around, in other words. It's all just entries in a book someplace.
Right, yeah.
But the actual amount of cash in the U.S. in the world, because the U.S. Currency is the world reserve currency, the actual amount of U.S. currency floating out there is so small that if everybody tried to pay their bill at the exact same time, there wouldn't be enough dollars. And so he's thinking the dollars are gonna go through the roof. That's going to drive interest rates higher, not lower. And so the Fed's going to have a different problem on their hand. And that's going to be printing money so fast in order to keep those interest rates low. Because as soon as they start going up, they're going to have to pay more on all of the bonds that they purchased through the repurchase program. So watch for interest rates going up. That's going to be a real mess in the market. But I think they're going to lower. I think they got a couple of cuts to do before that happens.
Yeah, didn't we see a report where they were talking about the next one is supposed to be another cut already?
Yeah, I think there's going to be a couple of cuts. Probably the very next meeting, they're going to do a cut in April. They'll probably do another one in June. But I don't know. Things are getting very, very, very interesting. I keep putting money back into XRP. It hit a low yesterday around 22.5. I bought some more. Today it's up 7%, which is kind of nice to see. But I keep dollar cost averaging into XRP every chance I get. David Schwartz came out with an interesting talk at Stanford Blockchain. I think did we talk about that on Tuesday? Did you see that?
I don't think we did talk about that Tuesday.
Yeah, boy, he really had some terrible things to say about Bitcoin. How vulnerable it is to 51% attacks, how concentrated is the mining is, how it really, the miners are acting as an intermediary. And he equated that the mining process, the proof of work concept that Bitcoin uses, like eBay being in the middle of a transaction, right? So eBay just creates the platform, but you've got the buyers and then you got the sellers. And in Bitcoin, miners are right in the middle, extracting a transaction fee, very high transaction fees out of each transaction. You're just basically putting buyers and sellers together using a math problem that you're solving in the middle. And so he equates that to really more centralization rather than decentralization. And so just like eBay puts buyers and sellers together and it extracts a fee. Well, there's a conflict of interest in the miners. The miners want the highest fee possible. And each one of the participants in the transaction want the smallest fees possible. And so there's a conflict there. They're not aligned interests. And with the XRP ledger, the transaction fees are so small, there's an alignment. People just want to be able to transact with each other with the lowest cost possible without any friction. And that friction is that mining in Bitcoin. Fantastic speech. You can probably look it up on YouTube. Bank XRP, I know, did the entire video. And it's called David Schwartz at Stanford Blockchain. Great video. But yeah, he's absolutely right. And just like Uber too. I mean, they're extracting that fee out of the middle between the driver and the participant, and their interests are not aligned. The driver wants a lot of money, Uber wants a lot of money, and the participant wants as low as fee as possible. And so that's what I mean. Basically, that's what he said. Bitcoin is. It's a third party. It's a platform in which some participants want the highest fees possible, and the ones that are making money. And with XRP, you don't have that.
I found your link from Bank XRP and dropped that in there. It's about a half an hour long video. Looks like that one is.
Yeah, great speech.
Perfect. Great for everyone to watch that one.
Yep. Little technical in nature, but man, well worth watching.
Yeah, that guy's a genius.
Unbelievable genius. You know, he had a patent in 1988 for blockchain, distributed ledger technology.
Amazing.
Yeah.
That's when you start looking at the real things. It's like, oh, this is too new. It's like, look at where it actually came from. Look how long it's been being created.
Yeah. Anyway, I guess we're about at that time. All right, guys, we're heading back down 610, 612 here. Let's see what happens today. But we definitely have a market that has changed character. Heads up.
Yep, definitely. Stayed below it, never went above that negative 2,000 key point. 2 greens, and we're making reds again on the volume. And we saw it bounce off these levels. So if you don't have these levels, they're good to watch for helping what you're doing there. Highly recommend it.
Absolutely.
Any questions in the meantime? You guys have a great weekend, and shoot in emails if you got them. And we'll look forward to adding the price levels to the trade setup alerts on Monday.
Awesome, guys. Have a great weekend. See you, Dan. Tuesday's good next week. Same times, or you want
back to regular times, I believe, next week.
Sounds good.
Thanks, everybody. Appreciate you guys. Have a good day.
Thank you. Bye.
See you, Dave.